All right. Good morning, everyone. Get the doors opened up here. Dan here with tradingology.com in our trading room for October 13th. We're almost halfway through the month already. And as always, welcome to be joined by Dave from the Strong Market team. Good morning, Dave.
Morning. Good morning, Dan. Good morning, everybody. Good to be here as always.
We finally have some negative internals for once. We'll see if they let it last or not. Good morning, Andre. Good to see you. But we haven't seen red numbers in a while at the top of these tickers, that's for sure.
Yeah, we haven't. And, we've got the internals there just kind of creeping down a little bit. I think in probably one of the first times ever also is that the advanced decline line didn't immediately go negative and then go positive. It's just kind of stayed negative throughout the morning so far.
Good morning, BD. Good morning, Eli. BD, you were the early carrot this morning, the early bird getting the worm. So appreciate you hanging out in the waiting room.
Absolutely. And if you got the spreadsheet there, let's take a quick look at that because morning, Stephen. Morning, Eli, BD, Andre, good morning. Hopefully you guys caught the replay of yesterday's trading room. I think, it's a new strategy you can put in your back pocket and use it as necessary, as you see fit. But let's just jump over to, you can see that we've got, the last 2 days we've been up 161 and 250 points on the Dow, 30 and 57 on the S&P, but no bullish hurting. And the buy sell signal is 13 on both days. And this is where, your intraday updates of the spreadsheet come in real handy, because I went short yesterday at the close after looking at the spreadsheet, realizing there's no bullish hurting on the first column on 2 days in a row. Buy sell signal is topping out here at 13 apiece, which is typically a pretty high level. And so you absolutely, Dan did the update in the notes section. You nailed it, Dan. Absolutely.
You'll double top there, it's looking like.
Yeah. So that may be, continue to play out here. We'll see what happens, but you absolutely nailed the notes.
I learned from the master. That's all I can say.
And the pipeline is blue, which is really unusual. Typically we go white, but not blue. I mean, we went all the way down to 49% in the third column. Now we're kind of 62% all the way across. We hit a bottom, 52%, and started moving up. It's a very sensitive short-term indicator. So we may have hit a bottom in the pipeline. So that's another clue. If you put all of these together, you put the pipeline, you put the lack of bullish earning in the first column, you get the double top on the buy sell signal. Those are all indications that we're going to have some sort of pullback today. It's not, who knows what it's going to be, but pretty good indication.
Yeah, and I was looking, you have to go back quite a ways to see that much blue going on. Here's, we were way back in June, it looks like.
Yeah, actually, you're absolutely right. And if you take a look, we had that was the last 2,000 point, almost 2,000 point decline that we had just afterwards.
Yep. So right after that was warming up and we started losing these first columns, we could see potentials like this. We need to see some bearish hurting come in those. Well, we need to go along with that to complete that story.
Yeah, if we're going to get any kind of continuation here, we need to see some filling out of the bearish hurting.
So that's the barometer there. Keep your eye on that. And as Dave says, it's always great to do an intraday. We do wait for all the reporting to happen when we have higher days. One thing I was watching too that was unusual was it was a really low AVS day.
Yeah,
I found that to be unusual too, but I figured I'd keep the notes.
Well, one of the reasons for that yesterday was a holiday, federal holiday. So a lot of things were closed. The bond market was closed, so it's a lot of stuff going on yesterday that would have reduced that AVS.
Yeah, that Columbus Day always throws you for a loop because that's one of the odd ones where banks are closed, but a lot of other things are still open. There's still school.
Right.
All right. Roll that guy over here and see how we're doing this morning. I know we got a few Stevens. I know I was also taking a few short scalps and I grabbed some profits before the open. Then I waited for the open. Then I grabbed a few more after the open. So it was a good morning for short scalps. And then I know we had a few guys in the trading room or in the Slack channel talking about capture some profits as well. So congrats, Steven, if that's the same one that's in here. Good to see you.
Yeah, good job. Awesome. So we've got, Dan and I were talking yesterday, we kind of, we're looking at like different indicators for the economy. And I mentioned lumber futures. And I think you got that queued up, but we can take a quick look at that. Back in the late 70s, early 80s to mid 80s, this was one of the first indicators that I came across that was a bellwether of the economy. And it was something that I do look at on occasion, but it's not something that I look at frequently. Sometimes I'll go a year or two without even looking at it. But I said, well, the other day I said, well, let me bring up the lumber's futures contracts and see what's going on with those. And I mean, you can see basically it's been pretty muted. I mean, even back in the financial GFC 2008, 2009, I mean, it went down a little bit, but it really didn't do much. And then it's been kind of rising ever since then. And there's a, the idea is that when lumber prices go up, lumber prices are increasing, it's greater economic activity. So it's supply and demand, right? If there's relatively stable supply, demand increases, the future contracts are going to go higher because you're pricing in a future demand for the lumber products. But what's interesting, if you go back to the daily, we'll take a look at what happened since the March low. We had this really, really sharp increase here in March after we kind of bottomed out. We started getting some stimulus. And I think the reason for that, and it's just my conjecture at this point, I don't have any solid evidence or anything to back it up, but I think that people were anticipating supply chain constraints. And so large manufacturers of homes like Lennar and some of these other manufacturers, Hobarian and these guys were buying up lumber because they're going to need it if they're going to be building homes. And so they were in the futures market, bidding up the prices, trying to get as much lumber delivered as they possibly could. And so that's why we saw the price go up. Now, at some point, they're going to say, hey, you know what? We got enough. And the economic activity is slowing. Now, demands for homes did go up, especially those in suburban areas, because a lot of people were fleeing the cities due to the pandemic. Yeah, but at some point, you can see on September 10th, this huge gap down, dropping nearly 45% to where we are right now. And so whatever stock they had is probably eaten up, but it's also kind of a bellwether, right? So the demand for lumber right now is starting to drop because as the economy continues to get worse, people are not going to be building homes. And it's going to be, I think we're going to get to the point where the economy at some point continues to deflate. And so when we see declining lumber prices, it also means slower demand. Steven says lumber is ridiculous right now. It's been killing us. The prices are double to triple. Yeah, it's because there's supply chain constraints. And that's why a lot of the large players were in the futures market just after the March low, trying to buy up as much lumber as they possibly can, because the supply chain might be constrained pretty heavily. And so they're holding on to it. Large, I mean, think about Home Depot, Lowe's, big home builders. They need that lumber. Without it, they can't build any houses. So they probably bought up most of it, and that's the reason for the rise. Now it's back to the economy, and that's why we see a 50% drop here.
Yeah, I've talked to both people that are trying to build a house right now and contractors that I've worked with through the summer and whatnot. They were talking about they can't even bid their projects hardly anymore because the price of lumber is so volatile that it's a week-to-week basis. They say, can't even give you the price of this from their suppliers until the truck shows up. They look at the receipt, and they figure out what their prices they're going to charge the subcontractors. It's just ridiculous right now. I find it interesting too. You mentioned about September 10th, 11th here when we were up around, it was pushing up towards 1,000 almost. Then in
Yeah.
one day, then I'm assuming they froze trading or something. That's why there's no bar here.
Yeah, they had to. I mean, that would have kicked in the
Every limiter possible, right?
limits, yeah.
Then
Yep.
the next day was a small one, and that's trading's resumed since then, and it's going nowhere but down except for a little bounce.
Yeah, and we see it continuing to go lower. So it's one of the indicators that I used occasionally over the years. And I just happened to think, well, gee, what's going on with lumber right now because of everything that's going on? And I saw this huge drop. I said, wow.
Yeah, so we're talking average prices are 30,000. Now it's 70 to 80 for a new house just in the package. That's ridiculous.
Wow. Yeah. So that's something that's I wouldn't be surprised to see us back at much lower levels until that supply begins to run out. But it's demand that's going to drive it up. I can see why the demand went up in April and May because everybody's looking at the supply chain constraints, and they're thinking they got to lock in the price before, and they got to have that inventory in order to build homes. Now it's like, well, is there demand?
Right.
Yeah, 30 million people unemployed. They're not going to be out there, financing new home construction.
And
So,
loans are harder to come by because the rules around lending is more difficult than it is before when things like this happen. So there's less home loans or less building loans.
that's right. Yeah. All the banks are tightening up their credit standards, so it's going to be even harder for a lot of people to get those kind of loans. And if you do any new construction, I'm not really too familiar with it, but I do remember when I was a licensed real estate broker in New York State back in the early to mid 90s, and I do remember new construction financing is not like just buying an existing home.
Right.
You're in there for a few months or something initially, and then you get these payouts as progress is made on the home, and then there's a big balloon at the end where you refinance into a 30-year or something.
Yeah, exactly. They want to roll it over into a traditional one as soon as possible once that's getting
Right.
the building complete, right?
Yeah. Steven says, curious to see how far behind the futures and retail price will follow. Yeah, that would be interesting. So if the futures are dropping, I mean, I guess it really kind of depends on the supply at this point. So if supply is low, they might keep prices high in the stock, in store. So if you're going to, whatever lumber yard or, wholesale facility that you're, buy lumber from, or Lowe's or Home Depot, they're probably going to keep prices high because they know that they're not going to have a lot of supply coming in. So they may not drop prices based on the futures at all. Steven says he's having to hold on projects just to wait for prices to come down. I'm not so sure they will come down, Steven. Do you build new homes? What is it that you do actually? You build new homes? Okay. Yeah. So I'm not sure prices will come down, to be honest with you, because if they see the supply starting to dry up, they may not want to bid up the prices, but they're going to hold on to the prices they have because demand might still be high, and so they're going to keep the prices high. When demand starts to fall off completely, then they might drop them. Katrina has a similar situation. They have, oh, okay, yeah, that's the supply chain constraints there.
Yeah, the fires.
Oh, yeah, the fires. Yeah, that's true.
You're getting the perfect storm rolling in here with multiple things hitting.
Yeah. Oh, good point. Absolutely, Stephen. Wow. All right, we're going on to new lows here. I think we're gonna, I don't know what's really going to happen in the stock market. I haven't really done any trading in the stock market in a while. I've been trading the volatility, as you guys know, VXX. I'm long TLT. I like bonds. I'm long the dollar. I think the dollar's going to go up. We'll see. But I've got, a couple other plays. I haven't really done a lot in the stock market. I do like swing trading versus what you guys are doing, real short-term stuff. But my macro view right now is I really don't know what's going to happen with the stock market. I think the stock market is simply fueled by the fact that everybody believes that there's more stimulus coming, but the way the negotiations are going, I don't know. What do you think? I don't think they're going to happen.
Yeah, well, it's so hard to get a read on it because as soon as you think one way, everything comes out another way, and it can change 3 times in 1 week.
Yeah.
So
And
I think that's the
overnight,
biggest reason that we're not doing one of the the VXX trade that's coming up tomorrow. I've seen a few people asking, hey, when's the next video? There probably won't be one, and just a heads up, guys. Just reminded myself is I have to be out of the office tomorrow morning, so we will not be a trading room on Wednesday, but we'll be back on Thursday. But yeah, Steven's hitting, yeah, not until after your election for sure. Sounds like they're holding things. I have that feeling too. I don't think there's going to be anything until after it. I'll be surprised if they sign anything. That's just my personal thought, but it's so hard to get a read. It's like you have to almost start watching the news or quit watching the news again because it's all just ridiculous. It's one way than the other way, and it's almost feels like they're using it for their own advantages.
it is. Like I said yesterday, I think the Democrats will want to hold it up because it makes Trump look bad, gives him an edge in the election. Trump, I don't know. If he gives in, he looks weak, right? So he can't give in. He has to keep battling for it.
Oh, for sure. And it sounded like it went, similar what we may have talked about this yesterday, I forget, where it was the big tweet last week caused the big drop. Then that night he said, nope, I still want to sign one right now. And then it was, I want a bigger one than you guys are even proposing. So it goes the pendulum from one swing to the other within 12 hours, which completely shakes everything. And then this week it's, we're not going to do a video thing because people talk about they don't want them to be muted. So who knows what actually is behind all that with the next potential. I don't know. I think it's actually been canceled, hasn't it?
I think so. Yeah, he didn't
Next
want to
date.
do the electronic.
Right. Which is funny because you think about it. The first thing I think of is they can mute your microphone if they want you to. So I don't think that's going to stop them if they really wanted to.
Yeah. Yeah.
But yeah, I think the longer term swings and the short term scalping is what I'm taking advantage of right now. And today's the first day in a while that we're seeing these negatives just kind of come back around full circle where we're actually down, negative 1,300 right now on those internals that we see up here for the issues that are coming down, and volume is slightly going down. Remember yesterday, Dave mentioned he saw that big sell order in the supply demand. Maybe this is part of that coming to fruition where they're actually having to get them out of the books.
Yeah. They may have held it right to the end of the day. Maybe because the bond markets were closed. Maybe because there wasn't full participation out there, and they needed that liquidity. So yeah, maybe they held it till today. But
Did notice crypto was slightly up yesterday. It's kind of holding steady this morning.
Well, I mean, actually, if you look at Bitcoin, it was at 11.7 last night. Now it's 11.380, so it's down about $300. And the reason for that is the DXY, I think, is up fairly sharply this morning, very sharply. It looked like it was going to go down to new lows. It hit 93, and it found support there. And now it's at 93.53, so it's a pretty sharp upward move in the DXY, up almost 0.5%. So maybe this is the beginning of a new upward trend. Kind of hard to say, but that 93 level held the support pretty good. If we break down through that, below that, we could go to new lows, but right now we're getting a pretty sharp move up. And that's why Bitcoin is down a little bit. Most of the cryptocurrencies are down a little bit. But on Friday, the DXY dropped sharply. And so that's why we had a little bit of a boost in crypto over the weekend, in my opinion.
And then Steven's mentioning this is the first time too, just since we won't be here tomorrow. The VXX actually got below that 24 level with that move at the same time. So we're down here floating around 22, 23 currently. And let's see where we're trending at. So that's not at I keep waiting to see if our 3 line up again that we'd mentioned a week or two ago. If we see this VXX trade and the SPY VIX ratio get up to these higher ends, that's when those warning symbols go off again, remember? So keep your eye on that.
Well, the thing about that is that, the high, so with the VXX trade system, the signals are like under 10 and over 25. We haven't seen over 25 since the February highs.
Mm-hmm.
And we've, and the Nasdaq has gone up higher. The S&P 500 is only a few percentage points from the top of February, but the VIX SPY, the VXX trade system indicate ratio, isn't even, not even close to that. So there's I think, I don't know, I'm not quite sure exactly what it is, but one of the things that I've been thinking about recently, and I'll do some correlation analysis or just relationship analysis. Maybe they're not correlated, but there's some relationship between VXX and the actual money printing, the Federal Reserve quantitative easing. I heard somebody, and I forgot who it is, mention something about how volatility is sensitive to quantitative easing. And I have to go back and look at that relationship and see if there's anything there.
Interesting. I can see it.
Yeah. So as they continue to do quantitative easing, it's held the VXX up a little bit. And it hasn't gone back down into the teens, which I would have expected by now. I mean, we're up near the highs in the stock market, but the VXX is still above 20. Yeah, we'll see. I'm not going to do, but paper trade, absolutely. Go do a paper trade.
Yes, exactly. In case you haven't got that, Stephen, we are paper trading VXX for anybody that's learning it. I know there's a few new members that have recently come in too, so welcome to you guys as you're learning the VXX system. This is the perfect time to paper it and watch it in action.
Absolutely. So I don't know what's fueling the stock market at this point. Stimulus hopes, who knows? All I know is that GDP is minus 9%. That's ridiculous. And the more government debt there is, the less economic activity we can actually expect.
And we're creeping around this 0.8 and 0.2 now. So if that continues to look worse, look for additional down movement, unless it reverses. Not a huge volume move yet, but we'll see. Keep your eye on it.
Yeah, we'll see. We'll see. The supply demand on the New York exchange keeps getting lower. We finished the first hour at about 9.49, and we're currently at minus 10.6. So continues to move lower here.
Oh, and let me pull that one over so you can see it. Get this chart adjusted. There's one Dave was just referring to, was the supply demand 10417 we see yesterday. Interesting part about yesterday too, I did notice when we had that ridiculous rally up, which looking at the SPX and the Dow, but there was only around, that didn't even break a 5.
Yeah.
All day, which is interesting.
Yeah, absolutely.
And we're going negative 10 right now.
Yeah, in the first hour, I put it on an hourly chart, and then it settled at minus 0.949, and we're below that now. So as long as that continues to trend lower, we'll probably see lower prices. The index got a little bit of a boost. I think I think Apple was up pretty significantly this morning.
We got earnings starting to report soon too as well coming up, so that'll be affecting a few things.
Yeah, 10 a.m. PST time, they're coming out with their new iPhone that is 5G enabled.
Gotcha.
And a new design, they said.
Yeah, but how many times has it been leaked?
Yeah, I know. And not too many people can actually take advantage of 5G. 5G is not everywhere.
Oh, the strength is way down at -9 too. That's a big number for the strength indicator.
Yeah, that is. Yeah.
All right, we're getting close to a wrap for today, and we'll see you back on Thursday. But any final questions you guys got, or any final thoughts, Dave?
I have no idea what's going on with the stock market at this point. I don't know if it's going to go up, it's going to go down. Just keep an open eye. If you're trading short term, get in and out. I think volatility will pick up. We'll see. I just think that we're getting some a little bit of a boost in the bonds. We talked yesterday about the yield curve hitting 1.6, close to 1.6. Every time it got up there, the Fed came in, bought the long-term end of the yield, and pushed prices back lower. So that's all I'm kind of really focused on at this point. It could affect volatility, so just watch out.
Sounds good. As always, gentlemen and ladies, we appreciate your time. We appreciate you joining us. And if there's anything we can always help with, let us know. You know how to get a hold of us.
All right, guys, have a great day. See you, Dan.
Easy, Dave.
See you Thursday.
See you guys Thursday.
Bye.
You're welcome, Stephen.